Hello and welcome to the Cold Start Corner Live. I'm Eric Matei, joined by Evon Mendrin on today's episode where we are talking about financial planning for your cold start. Evon, welcome to the Cold Start Corner Live.
Thank you so much for having me. I'm excited.
Excellent, man. Well, hey, I know we've got a lot to get to. And, as we were having our conversation prior to going live on this episode, we were talking about really the importance of kind of segmenting financial planning for a cold start into kind of like three distinct areas, right?
Right.
So why don't you first kind of like serve up kind of what those three areas are, and then we'll jump into what today's topic is all about.
Yeah, in fact, Eric, if anyone's talked to you about your cold start process, it's very much like the process to go through that cold start and get that cold start launched. It's planning your finances before doors open and preparing your finances to start that new business is sort of phase one. So it's that before you actually get things started, how do you prepare your finances to get to that point? The second phase for me is like doors open, you're open to the public. What are some financial planning considerations that you need to prepare for, both in the business, because now you're owning this new business and you have revenue coming in, and what do you do with that? But also on the household side as well. So doors open in those early years, what do you need to think about? And then finally, once, after those first few years and you're more established, what do you need to think about there? Now that you have more cash flow in the practice, what decisions do you need to make, both in the business and with that cash flow for your finances? So those are sort of the three phases: before the business is open, right at doors open, and then when you're established.
Awesome. And today on this episode, we are laser focused on kind of where it all starts, right? We're talking planning and feasibility. So we're talking about planning and feasibility here. We're talking about really preparing those personal finances for ownership and lending. So why don't we go ahead and jump into it and, take it from the top, Evon.
Yeah, I think the guiding principles when you're making decisions to prepare for any new business, two things you want to sort of have guide your decisions are: number one, you want to have cash flow flexibility. And on the other hand, you want to start to build some liquidity for yourself, cash in your life, right? So cash flow flexibility, meaning you're creating as much wiggle room as you can between your revenue and the mandatory fixed expenses in your life. Trying to keep your mandatory required expenses in your life as reasonable as you can, and then start to build up some cash in the bank account for unexpected expenses, to help create some comfort and a source of money if needed as you start to do business, and to plan for any expected practice costs that you might incur before the lending comes in. And I think in addition to that, sort of the thing you want to think about is, how do you plan your cash flow in these early 2 to 3 years so that you can pay your living expenses? I mean, having a plan so that your cash flow is sort of projected out and planned for those first 2 to 3 years is really important, because number one, your business is only going to go as far as your ability to pay your personal finances, to pay your personal household expenses. And you need to create a long enough financial runway for yourself in the household so that your business can have time to get revenue, to pay expenses, and to grow. Because you're not going to be able to pull a revenue out of that practice right away. It's going to take some time. All right, so having a game plan to figure out, okay, how are you going to cover your personal lifestyle reasonably in these first 2 to 3 years, I think is really important. Another reason that's important is because you need to prove your credit worthiness to a bank in order to get lending to cover all these startup costs. So they're going to want to make sure that you have a game plan to cover your household expenses and that you can pay the debt. And that's what they're looking at. So it's really important to have that sort of cash flow game plan for yourself. Just like if you're working with Eric and you're putting together that feasibility analysis for the business, you need to sort of think that through for the household as well.
Absolutely. So on that note, let's I suppose first start by defining cash flow, right? Because I think it's important for our audience to really understand when we're talking about cash flow. Man, we got money in, we got money going out, but when we refer to cash flow, what do we want to capture in that?
Yeah. So it's just when you're sort of planning this out for yourself, what is cash flow? Well, it's just what are the expenses you need in your life. The first thing you want to think about is, what is a reasonable lifestyle for you and your family. And I want to emphasize reasonable, because I think we think we can live on rice and top ramen. And especially, maybe it's easier when you're single, but especially if you're married or if you have kids, planning out what is an actual reasonable lifestyle that you can maintain is important, and be realistic about that. You don't want to underestimate the expenses in your life. And that's a really important part too, in having that conversation with your spouse and getting that spouse on board. That's such a critical part of opening any new business, is getting that spouse on board. So firstly, just look at your expenses and say, okay, what is valuable to us? What can we trim or put aside? And just project that lifestyle out as best as you can. I mean, it's a lot can be up in the air 2 years from now, but as best as you can in these early years, what does that lifestyle look like? So first thing is expenses. The next thing after that is what revenue is coming in, like what income is coming into the household. It could be a spouse's income. It could be you're already planning to associate part-time in other practices. Depending on the lender you're working with, they may require that anyways. So it could be part-time associating income. It could be rental income. I don't know. Whatever income you're expecting already to come into the household, add that in there. And then whatever's left, whatever expenses are not covered on a month-to-month basis, that's your gap. And that's just what you need to plan around. And you may plan to associate additional days. You may have enough cash set aside to sort of supplement that a little bit. So just start to think about, okay, how do you make sure that your expenses are covered in these early years? And that there's no real magic to that. Like, a lot of that comes back to just basic budgeting principles, but it's not easy for everybody to think that way and to project that out.
Absolutely. So on that note, let's talk about, I know a question that's a looming question for a lot of doctors that are looking to cold start or purchase a practice. Let's talk about debt, right? Let's talk about that debt as it pertains to student loans, as it pertains to home ownership and a home mortgage. Why don't you share your thoughts regarding the role of debt in planning and feasibility for your cold start?
Yeah, this is an interesting topic because, when you're an optometrist, especially earlier in your career, like you go through undergrad, you go through optometry school, maybe you go through residency, and you kind of want to live a little bit. Like you do want to live your life, and you have to think if this is a certainty in your near future, like if you're definitely going to be cold starting a practice, there's just going to be some trade-offs. And one thing I'll say about non-student loan debt is that just be careful about adding on additional fixed costs right when you're about to go into underwriting for your practice loan.
What do we mean? What do we mean? Why don't you identify additional fixed costs?
The big ones are going to be a mortgage and a car loan. I mean, those are okay. We can talk about lattes and all that stuff. That's not really the difference maker. The difference makers are going to be mortgages and car debt. Number one, because it's going to impact your cash flow. Just your expenses are going to be higher. It's a higher threshold to cover. But number two, it's going to impact your debt to income ratio for that practice loan, right? So just be careful about that. Be careful about adding on additional large debt fixed cost. The other one is important, and that's student debt. It's important because it's a part of almost every optometrist's life coming out of college. What do you do about that? Well, there's two general approaches that you can take, and I've seen both work. Number one is you can just plan to tackle that debt as quickly as possible, get it off your balance sheet before cold starting a practice, right? The other is going into practice ownership with that student debt. And you're just going to try to manage to keep that required monthly payment as minimal as you can to get you into practice ownership, and then tackle that more heavily as the revenue and profitability is increasing. I've seen both of those work, and paying it off is really just about managing your expenses as frugally as possible, trying to add extra income sources, whether it's associating on Saturdays, whether it's side hustles, whatever it is, trying to put as much money into that debt as you can. That's usually where you're going to see optometrists refinance out of the federal student loan system. Just be careful about that. Be really careful about leaving that federal student loan system, because once you do that, you can't go back, and you give up optionality and you give up some protections there. But when there's a huge interest rate difference and you're quite certain you have a game plan to pay that down, that can make sense too. If you're going to go into practice ownership with the student loans, then you're trying to just manage and keep that monthly payment as low as possible. If you've already refinanced, interest rates are pretty high now, but in the past, there were opportunities to restructure that debt, to refinance it to a longer period and lower that minimum required payment. If you're still in the federal student loan system, this is an opportunity where maybe you consolidating can give you a longer payment term and lower payments, or income-driven repayment plans can be a really helpful sort of stepping stone plan to get you into practice ownership, lower your monthly payments. Because when you think about it, when you get into those first couple of years, your income's going to drop, at least your income as the owner. And so there may be opportunities to use an income-driven repayment plan to lower your payments, put some room within your cash flow, and then as that profitability increases, you can then start to tackle that. Especially there was the recently announced new income-driven repayment plan. If that becomes final, that can really lower your payments and also keep interest from accumulating as well. So something to keep in mind. Just be careful about exiting that federal student loan system. Don't do it lightly. Be careful about that.
Yeah. Hey, I was going to say that's a totally separate topic. I think that is worthwhile. And I know you've got a lot of resources available. Optometry Wealth Advisors, you got a lot of great stuff regarding student loans. I will say this, Evon, and you may recall we were talking about this prior to going live here. We actually have clients, cold starting and purchasing practices that do carry student loan. Student loans are not a deal breaker. As a matter of fact, man, if there's really one big takeaway I want of our listeners to really take away is that y'all, like, optometry, modern optometry is magnificent. Banks are absolutely lining up to help enterprising, entrepreneurial, modern ODs cold start and purchase these fixer-upper practices. It's happening. So don't let your student loan situation dissuade you. Now, does it have to be part of the financial planning of it? Absolutely. And rest assured that when you're going through the process, these banks are used to working with doctors in these positions. And obviously, look, remarkable resources like Evon. And once again, we're going to give some more information when we wrap up here, how you can connect with Evon, because, student loan planning is a big part of what he does in working with modern ODs and financial planning. So, all right. Hey, Evon, thank you so much for that crash course regarding the role of debt in the equation. So now let's talk about savings and liquidity, right? And having access to those funds, and kind of, I think, perhaps that role reversal that many folks experience, right? If you go from years and years of kind of accumulation to where now you're kind of like, hey, you've set up this money that you're expecting to draw down on. So why don't you speak a little bit regarding savings and liquidity and emergency funds and balancing all of that stuff while planning for your cold start?
Yeah, I think liquidity is underrated no matter what stage in your career you're in. Liquidity, just cash on hand, or even like a taxable brokerage account on hand, is helpful for a lot of reasons. Number one, it's going to bring your stress down when you know you've got funds set aside to tap into if needed. And as much as you can lower your stress on the financial side, on the personal finances, it's going to help you focus on the business and make better business decisions. So that's also going to help you plan for unexpected expenses that might come up that you don't necessarily want to take on additional debt and hurt your cash flow for. So that's another thing. You may have business expenses, or maybe it's attorney costs or something that might come up before you get lending. So maybe you want to have cash on hand to prepare for that. So that's something you can prepare for. And you may supplement your income from cash that you've built up. And that's okay. Think about it. You're putting cash into this bucket that's meant to be used for this reason. That's the purpose of it. And I know it's hard to draw down from that at times, because it's scary to start to lower the amount of cash you have available, but that's what it's for. And I'm a big believer, even if you need to, as you're trying to grow the amount of available cash you have for this purpose, I'm all for, if you need to lower things like 401k contributions, if you need to lower dollars going towards other investments in order to start to build up some liquidity, I think that's okay. Now,
absolutely.
there's other nuances there. If you have, for example, an employer match, and especially if you don't have a vesting schedule to worry about, meaning you can, if you leave tomorrow, you can take the employer's dollars with you. That's something you need to consider, because it's part of your compensation. You're leaving money on the table for not doing that. But outside of that, I think your priorities have shifted from saving for the future in the distant future to now saving for the near future. And you're not investing, right? It's not as if you're stopping to investing. You're preparing for this huge investment that's coming up in the near future. So I'm okay with that as well.
Absolutely. Awesome. I'm really glad you brought that up, because you hit the nail on the head. The critical word there, it's all about prioritization, right?
Yep.
And it's realizing that if you are going to embark on this journey to cold start or purchase a practice, you really want to be fully committed to it. And as such, you need to be wary of what you're prioritizing. So in much the same way that, Evon, I like how you were mentioning regarding, like, your personal budget, be reasonable with your personal budget. Okay. You need to prioritize what's important in your personal budget and perhaps let go of that which is not. Same thing here regarding your other retirement vehicles you may be funding. Prioritize that investment dollar. And if it's about getting you to successfully cold start or purchase and transition that practice, then absolutely those dollars are a much higher priority serving that need now. And look, I mean, Evon, that's where we talk. I know we're going to talk about this like much later down the line, but I mean, that's where you really need to look at what you're devoting your attention to, and the insane ROI that asset will provide for you over the lifetime of the asset, right? If we're speaking of the practice as an asset, look at the lifetime that is going to spit off, right? So
absolutely.
If you have a couple years on the sideline, a year or two or three on the sideline, where you're not throwing money to those investments, again, the ROI over the lifetime of that practice is going to radically outperform what those 3 measly years would have resulted in.
You're absolutely right. Remember that you are starting a new business. That is an asset to you. Just like any XYZ publicly traded stock, you're going to have cash flow from that practice. It's going to be from the profitability, and hopefully the value of your ownership is going to increase. So you're going to get a return on that. And that is very likely to be the highest returning asset on your balance sheet. So the sooner you can get that started, that is your goal. How do you get into practice ownership and get that process started? You're going to have time, and you're going to have the cash flow to invest in these other accounts later on. And they are important, but you want to prioritize your cash flow and make sure you're putting it where it needs to be based on those priorities. Yeah.
Absolutely. Hey, one other thing that I caught there in that last little segment also that I wanted to make mention of was you mentioned about also having cash on the sideline for some of these startup costs for your venture. And y'all, okay, listeners out there, banks want you to do this the right way. Banks want you to pay an attorney to provide counsel. Banks want you to hire a CPA to provide your accounting. Banks want you to hire consultants, teams to get you set up for success. So, and this you'll find in some other resources we've got there at Akrinos.com, there at the Cold Start Corner, Akrinos.com, but where understand all of those funds, all of those itemizations will be included in your total capital investment startup costs you're applying for from the bank, right? So to Yvonne's point, where you may have to have that cash on the sideline to fund an initial retainer to hire that professional, understand that all of those funds are going to be available in that loan. As a matter of fact, some of the first disbursements you'll be able to take out of your loan is to simply reimburse yourself for some of those initial expenses that you didn't have access to those funds initially. So also side note there, y'all, for those of you that have started on the process, cold starting or purchasing, if you've already incurred some expenses going down the road, be sure you're holding all those receipts, even if you're paying for them with your personal credit card. It's all going to come full circle to benefit your tax situation going into next year. So moving along here, Yvonne, so we're talking about cash flow, we're talking about expenses, we're talking about prioritization, right? When it comes to savings, that liquidity is really important to have that cash on hand, right? So Let's talk a little bit about protection and
Yeah.
insurance.
Yeah.
So why don't you speak to that?
Yeah. And I think, you try, when you're putting together this initial, like what expenses are valuable to your lifestyle, try as much as you can to keep these major insurance policies that cover the big risks in your life, try to keep them in that budget. So your disability insurance, if you have private disability insurance, you may have been relying on group coverage or AOA coverage, but if you have private disability insurance, that's still important. Even if your income is going to drop, that's still such an important protection. Life insurance, if you have a family and you have life insurance, try to keep these major insurance policies in there. I don't know if you've ever seen the movie, was it Pearl Harbor, where there's a scene where they're trying to lighten these planes to make it more fuel efficient. And they're just like tearing everything out, like anything and everything that can come out. You don't need to take that approach. Try to maintain like the key things and try to keep these major insurance policies in there. Health insurance, of course, is a part of that. You'll have to think about how you're going to get that covered as well. So try to prioritize those. As you open your business, you're going to talk hopefully with a good broker, get general business owner liability policies. You're going to work on malpractice insurance. So you're going to work with someone to get these business policies that you need in order to get started. But in the personal household side, try to maintain those and don't automatically assume those are things you want to tear out.
Yeah, man, great point there, Evon. And also, I think of note here also is the importance to be sure that you have personal protection, especially if you have a family,
Yep.
And you have that business protection. Specifically, what I'm speaking of here as it pertains to life insurance and disability insurance, right? You want to be sure that your family is taken care of separately from how the bank is being taken care of, or if you're in a partnership. The same thing applies with disability insurance. So if you find yourself going into this cold start or going into purchasing this practice with a partner, there obviously is going to be buy-sell insurances, both life insurance and disability insurance. Be sure all that stuff is separate from that life and disability insurance that is going to provide for your family in the event something were to occur. So really great stuff, Evon.
That's a good point in keeping in mind how the bank's going to want to get involved in that insurance coverage as well, or what they'll require in order to take that debt out too. Yeah.
Yes. Awesome stuff. So, okay, so as we're moving along here, again, we're talking financial planning for cold start, specifically planning and feasibility, right? Preparing personal finances for business ownership and for lending. We're joined here by Evon Mendrin of Optometry Wealth Advisors. So, Evon, as we're kind of making our way through here, kind of wrapping things up, we think also, I know you mentioned to me also something really important here on the front end financial planning for your cold start is the entity selection.
Yeah.
Why don't you share some of the insights and definitely please do speak also of kind of the state specificities of some of this as well as it pertains to modern optometry.
Yeah, this is where it gets really fun because now you get to start to look at, okay, I need to get the business set up. What type of business entity am I going to select? And this is really a cross-section of legal, tax, and financial expertise. So you absolutely want to bring in the different advisors in your life, right? You want to make sure you're talking with an attorney that knows business law, talk to your tax professional, whether that's a CPA or enrolled agent, and then your financial advisor as well. Try not to rely on TikTok or even social media groups. There's a lot of smart peers in these social media groups, but rely on your professionals in all these different domains. But in general, what you're generally going to see is that the type of entity that's selected is usually going to be some type of pass-through business entity. And what that really means from a tax standpoint, and what that really means is that any net income, the profit from that business or the loss, is going to pass through onto your personal tax return. The business itself is not going to pay taxes. It's all going to end up on your personal tax return. So it's just going to be one layer of taxation. A lot of times it's going to be a limited liability company, so an LLC, or it's going to be a corporation taxed as an S corporation. So that's often what you're going to want to see, but your advisor should help you through that because there's a lot on, again, legal and tax. Every state has its own specifics about how they view these. And in general, there's three categories of different considerations that you want to keep in mind. There's the tax considerations, which is how will the entities be taxed? In effect, how will you be taxed as the owner? Whether there's going to be a separate tax return that needs to be filed, how much is that going to cost? Are you going to have specific ways that you need to pay yourself? How do taxes fit in with that? Self-employment taxes. So there's tax considerations you need to keep in mind. The second one is just non-tax considerations. So, for example, some states will not allow an optometry practice to be formed as a single member or single owner LLC. So you're going to have to go a different direction, right? So look at what your individual state is going to require of you as an optometry practice, or how they're going to view certain business entities or tax certain business entities. You want to look at how much flexibility you need, what are the requirements to maintain it legally in terms of whether it's corporate minutes or board of directors or whatever it is. So there's a lot of non-tax stuff you need to keep in mind. And even thinking into the future, like, are you planning to have a co-owner, or is there an associate? Do you see yourself exiting by bringing in associates? So there's even future planning that comes in there. And then lastly, it's liability protection, which is maybe the single most important reason you're going to create a separate business entity from yourself, is how do you separate your personal net worth, your personal assets, from the liability of stuff that can go wrong in that business? Patient slipping on the floor and suing the practice, right? That's what a separate legal business entity will provide, is sort of that limited liability protection. And that's what's important as well. And those are some things your professionals will talk to you about.
Man, I tell you what, this has been a fascinating conversation, Evon, right? As we're talking about financial planning for the cold start, for the purchase, and specifically that early stage, right? Planning and feasibility, preparing personal finances for business ownership, right? Yep. So I guess to kind of wrap it all up, I know you got some really cool homework assignment and a really cool resource that you've developed to help doctors kind of come up with that personal financial plan. So why don't you speak to that, and maybe also wrap it up with how folks can contact you for that asset or to learn more about what you got going on.
Yeah, I mean, the homework would be to start to plan out your expenses and income for those first couple of years. And I have a spreadsheet that anyone who wants it can just take. I can send it to you. You can adjust it as needed, sort of laid out for this purpose. So if you want it, there's no show notes to add it to, but on the socials, LinkedIn, message me. You can email me, Evon, EVON, @optometrywealth.com. I'll send it to you. You can take it, adapt it as needed. But that's something you can use for this purpose. So
remarkable, awesome. Well, Evon, man, thank you so much for hanging out here at the Cold Start Corner Live to talk about financial planning for the modern cold start. So, folks, listeners, you heard it from Evon. If you want to learn more about the whole world of financial planning, a lot of really fascinating stuff going on for modern optometrists, catch up with Evon over at Optometry Wealth Advisors for more great content, education tutorials, interviews, financial modeling simulators, you name it. We got it all at the Cold Start Corner at Akrinos.com for everything you need to plan, develop, and launch that cold start or practice purchase. So until next time, Eric Matei signing off.
Take care.